Hello, Matthew. Nice to see you again. I think spring is getting close finally, but my name is Stephen Roman. I'm the founder, chairman, president, CEO of Global Atomic Corporation. And we're an exciting business with both uranium and zinc, commodities that look good these days. So pleased to be here this morning and answer your questions.
Well, good to see you, Stephen. Just wanted to catch up. Obviously, things have been progressing at pace with you guys over there in Niger and also over in Turkey. And it's to that I want to talk to you about, which is we've been seeing some commentary in the market about the difficulties of doing business in Africa. You are a $800 million company now. I think we were talking to you when you were about 40 million bucks back in the day. So something's going right. So, are these reports of Africa being overstated?
Matthew, Africa is a huge continent. It's produced a wide variety of minerals from various countries over decades, and that's not going to stop. So in Niger, particularly where we are currently, and I've worked in many African countries in mining and oil and gas, we've had successful projects in a number of African countries. We entered Niger in 2005. We've got a project there that is the largest, highest grade uranium deposit on the whole continent, not just Africa, not just Niger, sorry. And the government is hugely supportive. This commodity, uranium, was the main revenue generator for the entire country. So 70% of its revenue over the years has been coming from uranium mining. They're very supportive of uranium mining. They're a country that's aligned with the West. They have a good mineral code there, fair taxation. And that's why we went there. They were opening the country for new foreign investment in 2005. We went through historical records. We picked areas that looked prospective. And in 2010, we made a huge discovery there. These are elephant-sized deposits. They're very excited. We got our mining permit in 3 months after we made our submission to the government. And we're going to be one of the first new uranium mines on the African continent getting out of the block and starting production in January of 2025. It's very exciting for both our company, our shareholders, but also for the country. So there are two major mines, Sommer and Cominac, that were operated by the government of France through their company Areva, which is now called Orano Mining. They were running those two mines for 50 years. They were developed in 1970, 71. Cominac just shut down after 50 years of mining in March of last year. And now the government, of course, they're really pushing us to get our mine up and running so that we can hire a lot of those people that were let go when that mine was exhausted. So a 50-year mine life, that's what we're targeting here at the Dasa project. It's high grade. We've completed a bankable feasibility study. We're now in the construction phase. So we released the other day our first blast video. I think a lot of people have seen that. We're excavating now the box cut. We're going to start underground in April by collaring the portal and getting underground. So we think Africa is a great place to do business. They're very supportive. There's been countries, there's, 76 countries in Africa. Some of them have been less supportive. Some companies have had the government want larger pieces of the pie. In Niger, we haven't had that experience. Orano has not had that experience. It's been steady state production there for many, many decades.
So as far as you're concerned, then, it's investable. Investors should not shy away from projects or companies which are in Africa. Obviously, Niger is very specifically saying they are supportive of you and what you're trying to do. in terms of allowing you to do business? Is it any different from doing business anywhere else in the world, in all of the other countries that you have worked in?
Well, just to finish off on Niger, they're now oil and gas producers. They're gold producers. They are uranium producers. And compared to other countries I've worked in, of course, I've worked a lot in Canada and in the Athabasca Basin. The big issue there, some fantastic deposits, there's no doubt about it, but permitting timelines are very, very long, very long. We had one project at Denison that was called Midwest. It took us 30 years to permit that operation to start mining, if you can believe it. I mean, that's 3 decades. Typically, they're at least a decade, maybe 15 years to permit there. So I don't know when those fantastic deposits will come on stream, but compared to that, working in Niger is a piece of cake.
Okay, look, and I don't want to debate like them or us. I think all of the above is required. It's just a question.
No, listen, Matt. I mean, the market needs all the uranium that is currently been discovered out there and more. So we're all on the same team. We do want to support each other and have these projects reach the stage where they can get into production and fuel a green power solution, nuclear power. I think everybody's now bought into the fact that this has got to provide a good base load. And we need all these deposits. We need the Canadian deposits, American deposits, the African deposits, Australian. But it's a matter of when do they come on stream and what's the timing of that production. So this is important. This is important for us. And, you know, we've been in the country 17 years now, and we've developed this project over a period of very bad uranium markets subsequent to Fukushima. But we knew we had a tiger by the tail. And there's just nothing like the Dasa project in Africa. I mean, this is a standout project.
Okay, so what I'm hearing is we need all of the above. It's just a question of the order of play. So your project is one of the nearest to production projects. I think there's a couple of others in Africa too. And what he's saying, investors should be looking more at projects like yours for now, and then look at
I mean, from an investor's point of view, you've got to have some diversification in your uranium portfolio. So for instance, myself, I own some Cameco, I own some Next Gen, I own Global Atomic. So, you know, every project has its own merits, and you know, you have to have a balanced portfolio. But for an African project, of course, there's a number of them. There's some that are further advanced than others, but I think you have to have a bit of Global Atomic in your portfolio because we're expecting to turn on the yellowcake production by January of 2025.
Okay, so that's imminent. Look, and you did actually put out a corporate update recently, so perhaps won't go over old ground there. Suffice to say that things are moving along as planned. I do want to talk about Turkey just a little bit in terms of how's that, because you're coming up to an imminent period of having the ability to having paid down the debt and actually it being a contribution towards your bottom line soon. Are we going to see that in 2023?
Yes. So what we did, we had basically all the debt paid off at the end of 2021. We decided to use some of that cash to acquire raw materials, basically that we need for our operation there. We don't know about supply chain issues and all of the nonsense going on, as everybody's aware now. So best for us to be secure. So we did that. We deferred final payment of the debt until the end of Q1 this year. So we should be pretty much paid out in the next month or so. We do get our management fees and sales commissions every month, and then once a year we have a dividend distribution to the partners, ourselves and Befesa. So we announced a long time ago that those distributions would start again in 2023, and we're on schedule for that.
Okay. Well, let's talk about the markets, if you don't mind, because, like I say, you put out a corporate update. Like, everyone knows kind of where you're at. You've been quite good at talking to the marketplace. I want to talk about some of the things that perhaps don't get the light shone on them with it, which is obviously recent events: Russia, Ukraine, the relationship between Kazakhstan and Russia. People are a little bit suspect as to who's pulling the strings there. Kazatomprom, 25% of the world's production, on its own, let alone its joint venture start production too. Where do you think that is going to go in terms of that narrative? Not necessarily the uranium, but the narrative, because Kazatomprom supplies into the US, or supplies US with some of its needs. It supplies into the West. Do you think we're going to get this kind of bifurcated market where we're seeing a Russia-Chinese consortium versus the rest of the world? I mean, what does the market look like to you?
That's a complex question. Geopolitically, I think it's fairly obvious that the Russians and the Chinese are fairly aligned in their thinking, and they're working together. Kazakhstan, of course, when they ran into troubles, they asked the Russians to come in with their troops to quell any sort of uprisings there. So one has to wonder a little bit about where their alignment is. So as far as utilities out there right now, I think, if I were utilities, I'd want to start hedging my bets a little bit and getting a little bit nervous about securing supply. A lot of them only have 2 or 3 years of stockpile on board. I think I'd be pushing that out to 5 or 10 years and really getting into the market again. They've really been sitting on the sidelines for a long time and sort of doing little bits and pieces to pick up a few pounds here and there. Cameco announced that they signed a deal for about 50 million pounds the other day. But in aggregate, I would say that most of the utilities are still out there sort of hoping the prices will come down, which I don't think that's going to happen.
It's a very tricky balance, because I think before the Russia-Ukraine situation, it felt like the utilities was just sitting back waiting to sort of see if this spot physical uranium trust was actually going to have any bearing on the market whatsoever. Yes, they're spending a lot of money. Yes, they're removing pounds from the market, but not in more than the incumbents had done previously, but not in a way which terrified utilities. Were you getting contacting you before the Russia situation?
Was I getting contact?
Getting contact by the utilities and saying, "Hey, would you mind sort of bidding on these RFPs for us? We're trying to get a sense of what's out there."
Well, I think since the Russia situation and the uranium price, I noticed this morning NYMEX was at $46 a pound on the spot. I think we're starting to get more interest coming in from utilities, definitely. So we'll see what happens over the next month or two. But I believe realistically they thought maybe the prices would ease up a bit, and that spot wouldn't have a long-term effect on the market. So we'll see. It's we're in a good place right now. I believe really realistically the nuclear industry is going to be in a renaissance period here.
Right, but I'm trying to work out if there's any kind of violent move in the price, because it has
violent move.
Because we talked about a year ago. It's at $30. It's moved to 45, 46. That's great, but it's been so steady accretive growth, and the spot physical uranium trust has been responsible for a significant portion of that, if not most of it. But do you think they can be relied on to keep driving that price up steadily as they buy it? Or is there going to be something more violent than that?
No, I think it'll be more violent than that. I think when the utilities decide to move, you're going to see the price spike again quite a bit. So, Spot is a financial player, obviously. They pick away at the market. They pick up some spot whenever they can get some, but they're not a huge factor in overall percentage point of view for the overall uranium market. As far as a real spike in the price, it depends what's happening with Russia and Ukraine, whether the other part of NATO countries get involved with this whole situation. I mean, hopefully it's not going to disintegrate into a major catastrophe for the world here, because that's going to really have an impact on people trying to keep the lights on and getting uranium for their nuclear reactors. So time will tell, Matt.
I guess that's the other thing. Obviously, in terms of energy security, do you think, when you talk about renaissance, do you think that that energy security issues, which are highlighted by the fact that the Russians can turn off the Nord Stream 1 and Nord Stream 2 is not going to get off the ground, that gas looks like it's going to stop going west and start going east now. That's problematic. But there's a gap between countries agreeing to nuclear as the solution. Of the EU taxonomy recently suggests that they are at least on board with nuclear as a green energy. But the infrastructure required is billions of dollars. It takes time. There's a lot of processes to go through. So between now and then, do you think that energy prices will come under pressure? And how do the governments respond to that?
Well, the governments with nuclear reactors are going to be sitting in pretty good shape. The ones like Germany that decide to shut them all down are going to be reliant on France to supply all their power, or they're going to start burning a lot of coal. There's some countries that are definitely much better placed than others. The ones that don't have nuclear power will end up buying power from a neighboring country and trying to suffice without a lot of Russian gas coming in. It's a dilemma, I would say, for a lot of countries in Europe. Because they become reliant on Russian gas.
They totally are, and I think that's been all the more apparent recently. Which kind of begs the question. So coming back to the Africa component, Africa's always been the playground for the Chinese in terms of acquisitions and so forth. Not least of all Niger in all of this. Do you think that that will continue to be the case, or do you think there will be groups recognizing that the pressure we're going to come under for this energy security and replace these Chinese dollars that have been coming into buy up all of these kind of uranium projects out there? I mean, how's this going to break down? Like, where's the money coming from? Because you guys may get into production, but you'll want an exit of some sort at some time. Do you look east? But, would you be restricted from looking east because of any kind of Russian connections? Do you look west? And if so, who's got the deep pockets that are going to, roll these things up?
Matthew, maybe we use this as a base, a company building asset that allows us to grow this company to $50 a share. There's no reason when you have an asset this good that you'd want to bail out too early. Clearly, there's a lot of interest from various countries now that have had discussions with us about a corporate sort of deal, but it's way too early. And I think just like any other big company that used to be a small company, Teck is a good example, and Canadian company trading at $48 a share right now. They started as a little small discovery of a copper project in Ontario and grew this asset into a major worldwide company. Well, there's no reason why Global Atomic can't do the same thing with the asset that we have.